We've got the dirty dozen IRS tax scams for the year 2021, plus how to pay yourself if you are a business owner. So welcome to Dollars and Cents. We're Central Florida's longest running radio program, coming to you on a variety of networks throughout Central Florida. We welcome our listeners over on the Space Coast at 92.7 to the program today. We also happen to be one of the top 25 financial planning podcasts on the World Wide Web. My name is Joel Garris. I'm a certified financial planner, certified financial fiduciary with Nelson Financial Planning, where our team of certified financial planners, we're joined by one of those certified financial fiduciaries today on the program. Christina Lamb's going to join us here coming up to talk a little bit more about those dirty dozen tax scams that the IRS put out as information for consumers. So important stuff coming up on the program. We'll start off with our latest blog post that we're actually going to drop on our website at Nelson Financial Planning tomorrow. And it really has to deal with the conversation about interest rates, inflation, and the economy. So it's a pretty important topic, and one that we're sort of hearing a lot in the background about, but nobody really is focusing that much on it, particularly the Federal Reserve, because there's an interesting cause and effect that the Federal Reserve might have to do if it is a situation where inflation keeps sort of hanging around. So let's start with some of the backdrop, some of the data, if you will. And the inflation data for the month of May showed a 5% year-over-year increase. If you've been to the grocery store, you may be thinking, well, 5%, that actually sounds pretty reasonable given what my grocery bill looks like. The reality is that if 5% wasn't high enough, June's reading came in at 5.4. We don't yet know July's reading. In fact, that'll probably be announced this coming week. So you want to be paying kind of somewhat attention to that, because if that's a bit higher than these 5.4 numbers, then that may force a reaction. And so that's what the blog post that we're dropping on the website tomorrow talks a lot about, is sort of this issue of inflation and how it all interrelates to interest rates and the economy. So of course, inflation simply means you're paying more for stuff, right, than you did previously. And some of what can drive inflation is simple supply and demand, right? So if you think of it this way, what's happening out there right now is you have a high demand, right? As people are starting to get re-engaged in economic activity, sort of in, I don't think it's really a post-pandemic world right now, because the COVID numbers are really kind of going through the roof. So I'm not sure how all of that plays out. That's where we would take a moment and encourage our listening audience to just simply get vaccinated so that that doesn't become or continue to become an issue, and more importantly, become an issue in your personal life. So but the reality is that a lot of people have a lot of cash and are out there trying to spend money, and at the same point in time, so that's high demand, right? So that's increased demand. And at the same point in time, the flip side is that there's been some issues with the supply chain, right? The supply chain that ultimately is having some issues with getting semiconductors, things like that are vital components of big ticket items like cars or boats or those kinds of things. And so consequently, that's decreasing the supply. So if those factors sort of are coming together to push up in inflation, that means that we've got increased costs. That means that your buying power, your purchasing power is reduced. And as you might well imagine, that also would then have an impact on the economy, in that one of the purposes or one of the roles of the Federal Reserve is to help combat inflation. And so they do that by shifting interest rates. So if inflation starts to run a little high, then what they would want to do is increase interest rates. Well, they've said they're not going to increase interest rates for a while, but this inflation story may force them to have to do that. And so when you raise interest rates, right, then that has the tendency to reduce the pace of consumption, reducing demand. And the other thing, of course, that interest rates do, particularly as they increase, is they serve as sort of a brake, if you will, on the economy. But obviously that can have a negative impact, because that means that your debt is going to cost more. And obviously if you've got a 30-year fixed rate mortgage or a 15-year fixed rate mortgage, that doesn't really affect you. But if you've got a home equity line, or if you've got credit cards, or anything that has a variable component to that interest rate, the reality is that you're going to wind up paying a higher cost. And here's the thing about that higher cost. When you have debt, it represents money that you've already spent, right? I mean, if I'm still paying a loan on something, well, that money's already just been spent. That money's sort of into the economy. So what happens when your interest rate goes up, your debt cost goes up, and ultimately that doesn't add anything into the economic picture, because that debt represents purchases that have already been made, and so that's already in the economy, if you will, and so it doesn't add anything into the mix. So what does alt mean, right? I mean, the answer is things can change, right? Watch inflation, watch interest rates, watch economic activity. There's a couple of things that you can do right now to sort of prepare yourself for whatever that future may look like. And it starts first and foremost of all with making sure that you've got a solid emergency savings account, right? I mean, make sure that you've got some cash on hand, whether that's in a savings account, a money market, CD, whatever the case may be. Those are all kind of the same thing. Understandably, not making a whole lot of money on them right now, that is for sure. But the reality is that they're there to be able to access, should you not want to access an investment that may not be performing as well in a slowing economy. So number one, always make sure you've got that emergency savings, that cash account. We can't emphasize that enough these days. And then number two, it has to deal with debt, right? So if you've got anything that is on a variable rate interest rate, then you certainly want to look into what are the options to ultimately fix that interest rate, because I don't think we're going to go lower on these interest rates, probably going to float higher. So if that's the case, then you certainly want to take advantage of fixing your interest rates on any of that debt that you have out there. So anyway, we put a lot more in that blog post that's going to drop tomorrow on our website at Nelson Financial Planning. Talked about some of the financial myths out there. Also even had a little bit of blurb in there about cryptocurrency. So make sure you're checking out our website, nelsonfinancialplanning.com, for updated information. Of course, that's also where we put this program as well, in the form of a podcast and things like that. So anyway, we're going to get ready to take a break here on this segment. When we return, we're going to be joined by one of our certified financial fiduciaries and the team at Nelson Financial Planning, Christina Lamb, and talk about the dirty dozen tax scams courtesy of the IRS. Coming up next here on Dollars and Cents. So every year, the IRS issues out the dirty dozen tax scams. And what they are is they're really a template for consumer awareness to make sure that you don't get caught up in identity theft or other financial scams. And every year it seems like they kind of adjust or morph. I guess the criminals always kind of have to change their game in order to sort of stay ahead of the latest technology and the latest intelligence. And so every year the folks at the IRS issue out this Dirty Dozen tax scam list. So on the program today, we're joined by one of our fellow certified financial fiduciaries at Nelson Financial Planning here on Dollars and Cents. Christina Lamb joins us. Welcome to the program.
Thanks for having me back.
Awesome.
Great to be here.
Yeah, you've been on the program before. We're hoping to have folks on the program on a regular basis going forward. So now you are perfectly equipped to be talking about the IRS because, in fact, you are an IRS enrolled agent. So tell us a little bit about that process of how you became an enrolled agent.
Okay. So I got that in 2013. And it's a series of 3 separate tests that go over the IRS rules, guidelines, procedures, representation for individuals and businesses.
So, and you've certainly been with us for longer than 2013. We were talking the other day, hard to believe you were an intern.
Yeah, in 2003.
In 2003. And Merrick, there's a large portion of the team here that started out as interns. We were joined on the program a couple of weeks ago with Garrett and then Krista before them. I mean, we're pretty much a UCF intern feeder system, if you will, here at the office. So, but that's where I'll take an opportunity to say, if you are an employer out there in Central Florida, I can tell you that the future looks great. Make sure that you're reaching out to college kids and giving them an opportunity to have an internship with your company. So tell us about this tax scam stuff and some of the background on this list that the IRS publishes.
So it's published annually. And this year with the pandemic, there's some new twists to it and obviously some old scams that have been around for a while.
And some new versions of the old scams.
Exactly. Yeah.
So there's some general categories that these scams all sort of break down into. So what are some of the kind of the general categories, and then for our listeners, we're going to get into the real nuts and bolts of some of those scams that are out there.
Right. So this year there is pandemic related scams, which would be like your economic impact payments, the stimulus. There is personal info stealing cons. There's unsuspected victims like fraud charities and things of that nature. And then there is some unscrupulous actions. So that's like offers and compromise and things of that nature.
Gotcha. So those are sort of your 4 general categories. So let's start digging into each one of these 12, because I think it's important for our listening audience to really kind of understand just how they can get caught. And unfortunately, we see it every day. We're going to kind of intersperse this list with some stories that we've seen here at the office. Just folks that get caught unexpectedly. So what's the top of the list, if you will, on this Dirty Dozen tax scams by the IRS?
We're going with the economic impact payments.
So what's that one all about?
So that's about stealing your economic impact payment. So whether that's a phone call or an email trying to get your personal information or your bank information, as well as good old-fashioned mailbox theft, people literally stealing the check out of your mailbox.
That's just unbelievable, right? And obviously that's a new one for on this year's list, because that goes directly to the stimulus checks that were issued out in the pandemic. So the first one would have been like in May of last year, then another one at year end, and another one in like April.
Yep.
So plenty of opportunity for people to try and steal that one. So that's a new one for this year. What's next on it?
It's going to be unemployment fraud. So this would be leading to inaccurate 1099-Gs, which is the tax form you get issued. By the way, some people don't realize they get issued a tax form for unemployment. But those would be incorrect because they're using your personal information to either try and get unemployment or just additional benefits.
Yeah, that's a situation where I find your Social Security number, I go in and try and apply for unemployment, get the money, and then what's crazy, and there's certainly been situations of this, all of a sudden a tax document shows up for you.
Yes.
and then you've got to deal with it, which is just unbelievable. We had that situation happen with one of our longtime clients here a couple of weeks ago, where her employer called her in and said, "Hey, did you apply for unemployment?" And she hadn't. I mean, she was working the entire time, and it's very clearly, wound up being a fraud situation.
Yeah, absolutely.
And that's off very scary when you kind of have to encounter that kind of situation.
And then try and deal with the state.
Right, and then try and deal with the state
to get it fixed.
and also your employer. Okay, that's a hard conversation. I guess number 3 on the list is the usual phishing. So tell us what that's all about.
So phishing targets individuals via email or text messages, and they're trying to be a legitimate source to get you to share your personal information or click on a link to download something. So keep in mind, these could be really tricky. They could look really legitimate and something that is okay to click on. Key signs would be look for misspellings, or you can kind of hover over the link and see where it's taking you. So make sure that kind of looks like where you want to go and not something funky.
Hover over it, but don't click.
But don't click.
Right, exactly. And I was reading, in this IRS disclosure, information document, that even tax professionals are not immune to it. There's also some phishing emails that are labeled IRS tax e-filing.
The e-file, the 8879s.
Right.
Yeah.
So even professional tax preparation firms are not immune to it. And I guess that's one of the reasons why. And I know nobody on the team likes this, but we have a monthly training module that everybody is supposed to complete,
watch
right?
videos and take a test.
Watch videos, take a test,
Yeah.
and then we'll all the
special emails.
And correct.
The pop-up emails, the
correct.
fake ones.
Fake ones that are intended to sort of test, okay, did you really pay attention to the video and stuff like that? So that's how we as an operation try and address this, because this is obviously a major issue across the board.
Definitely.
So what's next on their list, if you will?
So next we have social media scams. So this would be information that you've posted on social media about your life, or maybe your company, a business, that people will try and exploit to get you to share additional information to get details.
And my next door neighbor's parents actually got caught up in this one, and it's the one, the version or the flavor of this is the one where you get a call from somebody that the voice sounds off in the distance, and they say grandma, or they say the name, they don't say the actual name, but they say kind of a general name that they might have picked up on social media, or Grammy or Mammy or whatever the name is that you would be called. And they use that to say, oh, I'm in jail, or wire me money, and don't tell my parents, and so there's a lot of that certainly happens. So and I guess that goes directly into the next one on the list, right?
Yep, that's going to be impersonating phone calls, or what they call vishing. So these are just unexpected phone calls asking for personal information. The IRS has actually seen a particular increase in these type of scams related to tax liens. So, something to keep in mind is the IRS first point of contact if you owe money is always by a paper letter.
It's
not going to be by the phone.
Very, very important statement there. Look for the letter, not for the phone call. We've got a bunch more of these to talk about. There's 12 of them. We're only through 5. So stay with us through the break, and we'll return here on Dollars and Cents. On the program today, we're talking about the IRS Dirty Dozen tax scams. This is the list that the IRS puts out every year, and we're spending time on it on today's episode of Dollars and Cents. My name is Joel Garris of Nelson Financial Planning. I'm joined with one of our certified financial fiduciaries at the team at Nelson Financial Planning, Christina Lamb, where we got through the first 5, and now we got 7 more to go. So what's next on the list of things that folks need to be aware of and make sure that they try and avoid getting caught up in these tax scams?
So number 6 is ransomware. So this is where you click on a link or an attachment, and then it basically takes possession over your computer, so you can't access it anymore. And then they're going to request for you to pay in order to regain access. Another way this can happen is they can steal information from your computer and threaten to publish it if you don't pay their ransom as well. So that may be more applicable to like businesses and secret trades of companies and things of that nature.
Well, and we saw a perfect example of that a couple of months ago when the pipeline. Yeah, and that spiked up gas prices here in the Southeast for a little bit. So it's out there. And you just got to be, just got to be careful and just not click on anything that just looks. But they're good. I mean, we've all done it. But they're pretty good. What's next on their list of scams to watch out for?
So next we have fake charities. So this would be charitable organizations which are generally created to take advantage of a tragedy. So like COVID or maybe the forest fires that are going on right now, trying to get you to donate money for what they're saying to be is a legitimate cause, but it's obviously going somewhere else. Some things you should kind of keep in mind here is you just don't want to ever be pressured to donate. And then also, donate via credit card or check. Don't send a gift card. That's never the way it really works. Or even wire money. You really shouldn't do that.
Right.
For donations.
Well, and the other way to do that is, there's ways to also do some back checking on the charity as well.
Yes, definitely. Take some time to do some research.
Every 501c3 should be filing a tax return, and if it's a reputable 501c3, there should be some financial, even tax information on their website, and that's a good way to kind of verify the accuracy or the legitimacy of the particular charity. So I guess next up on that list, I guess we're on number 8 is the immigration/senior fraud. I remember back in the day that was really more about seniors getting, but now they're also reaching out more to first-time Americans, immigrants, things like that. So tell us a little bit more about that one.
So basically, they're looking at trying to access people with limited information. But this is really the old scheme that's been around for several years where they call you on your phone and leave you a message saying that you're going to go to jail or take you to jail because you have an IRS bill.
Right,
and outstanding debt.
And then the twist on it, I think, or the direction that this one has kind of spun is I think seniors have kind of gotten a little bit more educated about it over time, and so now they're morphing it more to folks that are first-time Americans, immigrants that maybe don't speak the language, we don't understand
how it works.
How it works, things like that. Maybe think that they can go to jail because back in their home country they could go to jail if they weren't paying their taxes. But there's a legal process before that. No one's going to call you and say you got to go to jail if you don't pay your taxes. But that's one of the ones that I think has evolved over the years as well. So we've got a few more. What's the rest of them look like?
So next is offer and compromise mills. So this is an IRS program where if you owe a large outstanding debt, they will possibly work with you to decrease that debt a little bit so you can pay it off. Now, there are certain qualifications to do this, though. You can't just say, decrease my debt. And,
I don't like my tax bill.
I just don't want to pay it all. So anyways, these scammers will charge you fees saying that they can get your debt reduced, excessive fees. And then obviously that'll never happen because you don't even qualify for that type of option. So one thing just to kind of keep in mind, the IRS actually has a pre-qualifier tool on their website at irs.gov, which you can use for free to see if it even is something that is, applicable to you.
No, that's cool. I didn't realize that they had a little tool on their website.
It's actually a great website, believe it or not.
Wow, that's great.
IRS.gov.
All right, so that's very helpful to folks just to at least check it out and see if they would at all be eligible. That's great. All right, so what are we up to? We're up to 10?
10.
10. Yeah, 12 of them. Man, I tell you, there's a lot of scams and a lot of different flavors. So hopefully by going through this list that the IRS puts out, we're able to kind of at least have people be a little bit more aware about them. So number 10.
Unscrupulous tax return preparers. So these are preparers who are not willing to sign your tax return. So by law, a preparer does have to sign it, should have a PTIN issued. So by not signing a return, that means that they're probably doing something on the return that's really not up to par, probably trying to get you a bigger refund, possibly charging a fee based on the size of your refund, which should really not be the case as well. Here again, you can always go to irs.gov to check the background of a preparer.
So you mentioned the PTIN. So that is a preparer taxpayer identification number.
Correct.
Not obviously that person's social or anything like that, but that's a specially issued number that you get from the IRS.
Correct. And the CPAs, enrolled agents, and then preparers, paid preparers can get that.
Would have that, and then that's how you identify, okay, this is somebody that actually can file this return on my
Has had some sort of training.
Yeah, which is good if you're doing a tax return. All right, so we're up to number 11.
So unemployment insurance fraud. This is where individuals coordinate with or without employers and employees, basically trying to work the system to get more unemployment, or even internal within the government fraud, trying to get more unemployment.
That goes directly to the story we were talking about in the last segment about the client who got called into her HR department and said, hey, did you apply for unemployment? I mean, that is particularly rampant. That's one of those ones that, again, in the pandemic world, if you will, that is seeing a pretty big increase on that. And then we've got one more on this list of the dirty dozen to round out the full 12. What's the last one here?
So the last one is abusive arrangements. So this is where preparers create false hopes of large tax deductions, basically making false claims of a higher refund, hoping that you don't get audited. I mean, we've personally seen several of these here where clients bring in previous returns prepared. It's generally large charitable deductions that they never made, high medical expenses, or even like a fake business schedule, just completely whole separate schedule on their return that never should have been there.
Yeah, no, that and sadly we have seen that a few times, and that can get pretty scary, because when you sign the return, and whether you're signing it, in the old-fashioned way and sending in a paper, or like most people, that are doing the electronic version, I mean, you're either way, you're still signing your return under penalties of perjury. So,
which basically says you're agreeing to everything on the return, whether you put it there or not.
Right. So certainly want to be very, very careful of that. So that wraps up the Dirty Dozen tax scam. Here's the sad reality. A year from now, there'll be another Dirty Dozen, because it's an IRS publication that they put out each and every year, and that means we've already got our topic for a year from now. So stay tuned for that future program. When we get back, we're just going to want to wrap this up, and then we want to shift a little bit of gears. I want to wrap this up real quick with kind of what's the advice for people? What's the bottom line advice for people, and then we want to talk a little bit about some of the different corporate structures that are out there. We talked about this a little bit at the top of the program, different corporate structures and how you can best pay yourself, looking at those different corporate structures as a business owner. Coming up next here on Dollars and Cents. So we're going to wrap up the conversation on this segment of the program about the Dirty Dozen tax scams. This is the list that the IRS puts out annually every year to alert people about what to look for. We've gone through 1 through 12. If you've missed those, then we encourage you to check out our YouTube channel or our podcast channels to kind of catch that conversation. All of that you can find through our website at Nelson Financial Planning. My name is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning. Join with me on the program, Christina Lamb, one of our certified financial fiduciaries. Also happens to be an IRS enrolled agent, so uniquely qualified to sort of talk through with us about these IRS tax scams that consumers need to be aware of. We've gone through 1 through 12. What are some of the bottom line advice for people in sort of how to kind of avoid these types of issues, if you will?
Yeah, I think just be smart, kind of be aware of what's going on, be cautious of going online, emails, even your phone. A lot of people think phones are not susceptible to stuff like that. So, and then the IRS will never call, not at least on that first contact. And then, I think just if it's too good to be true, then it probably is.
Probably is. That's exactly right. So just to stop and not just immediately react.
Correct.
Right?
Take a minute.
Take a minute and even maybe, let it sit to the next day and take a clear view on it. That's probably good advice and a lot of different things out there in life. So the reality is that no one's going to, be perfectly successful at that. So what are the things that people need to do if in fact this happens to me? Because this stuff has happened to me, and I'll share my story, but I wanted to kind of get your perspective on what should folks do if it happens to them.
Right, so you can get a PIN number from the IRS. That'll obviously help with your tax return going forward. You will have to enter it in every time you file your return. However, that is a good way if you have any tax issues to take care of that on that side. And then you can always get a credit freeze or a fraud alert on your credit report by calling all the bureaus.
Because that PIN number from the IRS, it's not one that you select. It's specifically Correct. Issued by them.
Yes.
And
every year it changes.
Oh, it does? Oh, okay.
Yeah. Every year it changes, and you'll get a new letter in January, and you'll have to have that. It's like 5 or 6 digits and plug it in.
Okay, and there's no way that you can pick it. It's automatically assigned by the IRS.
Correct.
Wow.
Correct.
Okay, I did not realize that it was renewed every year as a different number. And then the fraud alert or freeze is something that just makes sense. My credit right now is under a fraud alert because last fall I had somebody going around and trying to open up loans at different banks. Things like that. So the difference between an alert versus a freeze is that if it's an alert, it's still a little bit easier to kind of use credit. And so what an alert does is it means that if any new credit applications occur, that the lender is going to be calling you and verifying. A freeze kind of really does what it says. It freezes things up and locks things down pretty good. So that's certainly some things that folks can do if in fact they find themselves victim of that. So we're with this IRS stuff as I thought it might. It certainly consumed a lot of the conversation on the program today, but important information for folks to be aware of and to understand to help protect themselves on it. We'll shift gears a little bit in the last few minutes of the program, maybe carry this on to a future program, but we want to set the table about the conversation on what business owners have in terms of options for, and maybe today we'll just talk about what business owners have as options in terms of corporate structure, because there's 3 or 4 types of corporate structures that a business owner, a self-employed individual can have, and so each one kind of has the pros and cons, if you will. So what are the 4 kind of main types of business structures out there, if you will?
Right. So you can have a sole proprietorship, which is strictly for individuals. You can have a partnership, which would be for obviously any more than one. There's LLCs, which is a limited liability, and then there's also S corps.
So walk us through a little bit of the difference between those two. So sole proprietorship is your very traditional Schedule C type of tax return.
Yep, goes on your personal tax return. As I said prior, it's for individuals, generally for small businesses, and it's also the easiest to do and the most cost effective from a tax perspective.
Because there's no additional tax
yes,
return.
You don't have
or
a
anything
whole nother
like
return
right.
where it's
So
going to flow through.
it's just all part of your individual return, but again, it only applies if it is a sole proprietor. So single person. So and I guess that then would be lead you to the next. If you had more than one, then you might consider the next form, which is the partnership.
Correct. So partnerships are obviously for more than one person. You do have to do a separate return, which involves an additional cost there, and it passes through onto your personal return, and they still pay the FICA tax, though.
Yeah, see, that's the thing. That's the thing that I think a lot of people kind of miss. Is that the FICA tax, which if you own your own business, if you're generating a profit, then beyond just the income taxes that you have to pay on that profit. If you're a sole proprietorship, if those are really effectively work earnings, then there's also the FICA tax, which for someone that is paying that, they got to pay double pay, if you will.
Yeah, it's quite substantial.
So because they're having to pay both the employer side and the employee side and the employer side. So they got to
exactly.
So it doubles it up. So folks often try and think of ways in which, okay, well, how do I get around that? And the partnership doesn't necessarily get you around that. That's just really more of a vehicle for having more than one person, if you will.
Correct. Dividing the assets or liabilities, debts, whatever.
Correct, and then that flows via a K-1 to
each partner.
To each partner's tax return. So then you've got the limited liability company. So how does that one work?
So that basically offers some protection of your personal assets. Depending on your business, that may be a better option for you. And that can either go onto a Schedule C as a sole proprietor, or you also have the option to be an S Corp.
Yeah, so in Florida, an LLC, if it's a single member,
correct,
then that's treated as a disregarded entity for tax purposes, and so consequently that just kind of folds nicely onto your Schedule C, so you don't need a kind of an extra tax return or anything like that. So what's the last one of these kind of four choices, if you will?
So the last one is going to be an S Corp. Again, here it does require you to have a separate return. And so there's additional cost there. It's a little bit more of a complex structure. You don't end up paying the FICA. And then also you generally have to issue yourself a W-2.
That's where the thing comes into play. The S corporation is perhaps one of the more audited amounts of corporations from an IRS perspective, because the IRS knows that, hey, probably why you set up this S corp was to avoid the FICA tax. So you have to be legitimate in terms of how much you're paying yourself as a W-2. That's the important part to remember on there. So those are sort of the four main structures. When you join us again on the program, we'll talk more about this and talk more about sort of the pros and cons and kind of what might make some sense. I guess it really does depend on everybody's individual situation as to which of those corporate structures are the best. So thank you for joining us on the program. Good stuff as always, and thank you all to our listening audience out there for joining us today as well. This has been Dollars and Cents with Joel Garris of Nelson Financial Planning.